Hi guys, my name is Chase Sharifa and I'm a mortgage consultant, and what that means is I help with the financing of people's homes. This video is to just inform you a little bit of some tips, some tricks, and just to give you some knowledge about mortgages that you may not have known, or would just give you a little bit more advantage in the market. So today I'd like to talk to you about some changes that's about to happen in 2019. And what I'm going to talk about today is the changes in the loan limits for the counties that we serve here locally. All right, so let's begin. So, county loan limits. Before we tell you what's going to change with the county loan limits next year, I thought it would be good to define what county loan limits were. So for mortgages, there are different tiers of loan limits. There is a basic two-tier one, which is conforming or non-conforming. So what actually determines the county loan limits is the FHFA, which is the Federal Housing Finance Agency, and it's determined for Fannie Mae and Freddie Mac. Now that you know the conforming and non-conforming, in some high-cost areas such as LA County or Orange County, we have actually three tiers. We have conforming, which is just a regular amount, and then we have an added tier which is called the high balance, and then after that will be the non-conforming section. So to better give you an idea of how that is, let's put some numbers. So for 2018, the number is $453,100. That is the conforming loan limit. So anything below that, remember that's the loan limit, not the purchase limit. So anything below $453,100 is conforming, and everything $453,101 and above is non-conforming, right? And counties that follow this is like San Bernardino or Riverside. But for the high cost counties such as LA County and Orange County, it is $453,100 is conforming, from $453,101 to $679,100, that's high balance. And then anything above $679,101 will be non-conforming, or in the industry we also call it jumbo. It's actually steadily increased since 2016. So it went from $417,000 to $424,100, and then to $453,100 in 2018. And so now for 2019, it's raised again from $453,100 to $484,350 for 2019. That is now the conforming limit. And the reason for that is since there has been a price increase in the average US home in the last year or the last 4 quarters, since it increased by 6.9%, that means that the conforming loan limit will also increase by the same percentage. And that makes sense because since the prices keep going up, then that means that the loan limits have to keep up. And why do loan limits have to keep up? Well, because when families buy, like for example, if you were trying to buy a home for $480,000 and you're trying to go FHA or conventional, minimum down payment 5%, you would have to be in a jumbo territory, because $480,000 times 95%, that would be $456,000. And so you would be over the loan limit and you'd have to get a jumbo. Obviously, in our case and scenario, we would probably suggest just adding in the extra couple thousand, but sometimes families don't have the extra money to do that. So this is huge for families who are in the cusp, right in between the high balance and conventional territory, especially in the counties that don't have the ability for high balance. That's going to be huge for those families as well, because I know I've had a few families looking for around the $500,000 range, and you'd have to go jumbo in the San Bernardino or Riverside County for you to be able to get that. But now, since the loan limit will change, we'll have a better chance at getting more homes within the conforming limit. Great. So now the conforming limit will increase, and that means in the high cost areas or the high balance counties, LA and Orange County, the high balance limit will also increase, and that's a good thing. And that number is actually 726,525 for 1-unit properties. All of these numbers I'm telling you are for 1-unit single family residences. If you were to buy a 2-unit or a 3-unit or 4-unit, it'll also increase, and I'll put that in the description below, or I'll link it down below for more information. But I just wanted you to get to know that, so you have an idea of the conforming loan limits and how it affects you. And so now in both counties, in high cost areas, if you were trying to buy a $700,000 before, you'd have to at least put a down payment so that your loan amount would be $679,000. But now you can go as high as $726,000 and still not have to put 20% down. And that's the biggest thing about the conforming loan limits, right? So if you don't have 20% down, you can still buy a home, like a high balance home, $726,000 loan amount. So that means you could probably buy a home around the 750 mark and still could put 5 or 10% down, and you'll be okay. And so that's a great advantage. And if you don't have the money, and if you do have a little extra money, you don't have to put it all down, or you don't have to wait on that home. So that's good news, and I hope this was informative. So just a recap, conforming loan limits, there are limits in each county, and there's conforming, high balance, and non-conforming in the high cost areas, and in the regular areas it's conforming and non-conforming. And instead of 453 this year, it's going to increase to 484,350, and it's going to be 726,525 for the high balance. Yeah, perfect, great. So I really appreciate you watching this video, and if you found it helpful, please like and subscribe, and I will see you guys on the next one.